Since the market's so low, what's going to be the best strategy to keep our portfolio safe and still continue receiving some money? The best strategy is having dividend stocks. And today I'm going to show you 10 stocks that you'll be buying this week right now. And my name is Hugo and welcome to my channel. So we're going to start the week with 10 stocks and actually some of the stocks are also monthly, but most of them are quarterly. They pay quarterly dividends. But these are stocks that have a high dividend yields, and in the past few years, these are stocks that have been paying every single time. There are more stocks for this week, which I do recall, for example, CM, which is the Californian bank. They didn't manage to pay certain dividends during this year, so that's why I didn't include in this list, and as well PM Philip Morris, because I found a better option. So let's start it. So we're going to start the week with the ticker XRX, Xerox Holdings. So this is a company in the technology, hardware and storage. It's a company well known by the printers, but they have a lot of software that was developed by them, which are implemented in terms of business wise. They have a dividend yield of 6.18%. They pay quarterly, April, June, September, and December. The ex-dividend date is going to be on 29th of September, so you still have time to buy this stock. They are undervalued 87.6%. The future growth is 96.4%. Actually, it's quite interesting, the future growth. I think they have to shift completely their paradigm in terms of business-wise. The past performance wasn't so great. They had a minus 34.1%, and the financial health we have a 1 of 6, with in terms of assets around 4 billion, and in terms of liabilities around 3.5 billion. The company are good in terms of short liabilities. The rest they are quite negative in so there are only one KPI that actually it's positive. The same thing goes for some of the stocks that I'm going to mention today. The market sentiment, we have a buy. And as you can see, the stock has been quite stable in the past few weeks. In the 1 year to date, we've lost 31%, but this has been seeing quite normal in other stocks. We're going to see this on the other stocks. This is more information that I'm trying to collect to give you. If you appreciate this new view, please let me know in the comments. So I'll continue this way. If you don't like it, please just do a dislike or whatever. Anyway, the next ticker is going to be IIPR, Innovation Industrial Properties. They are the ticker on the industrial REITs and real estate. Today I'm going to show you a lot of real estate and REITs, stocks in REITs industry. So they pay a dividend yield of 7.67%. They pay quarterly, April, June, September, and December. The ex-dividend date is going to be on 29th of September. And they are undervalued 69.1%, which is quite interesting, as well as a Xerox. And they have a future growth of 11.1%. The past performance was 67.1%, which is usually when this happens with a past performance quite big. The future growth usually it's lower or negative sometimes, but in this case is still positive, which is quite interesting. In terms of financial health, we have a 4 of 6, which is really good, with assets around 63 million and liabilities around 56 million. And the KPIs that they don't comply in terms of finance is the long-term liabilities and reduction debt. And we have a market sentiment of a buy, which is quite interesting. In terms of the year to date, we have a loss of 62.4%, and in the past 7 days they increased 0.7%, which is interesting. But although they've been quite stable in the past few months. The next ticker is going to be NLE Capital Management. So these are actually quite a few stocks here that I already mentioned previously in my channel. This one, they have a dividend yield of 14.64%. It's a really high dividend yield. They pay quarterly, April, June, September, and December. The ex-dividend date is going to be on 29th of September. They are undervalued 50.6%, but the future growth is minus 6.90%. This is actually one of the stocks that I've been continue following and see what are the progression, and we see that the future growth still continue to be negative. We have a really big decrease, although The year to date we have a minus 36%, comparing to Xerox is exactly the same thing in terms of price. The share didn't went so down as some, but what concerns me in terms of this stock is actually the future growth is minus 60%. If it was like minus 5 or minus 1%, yeah, I could go for it, but minus 60%, it's quite a lot, and it's a big risk investing in this stock. In the past performance, we have a 6%, and in terms of the financial health score, we have a 2 of 6. And in terms of the market sentiment, we have a hold. Although this is not one of the best stocks to buy this week, you're going to have other stocks that pay during this week as well, with good dividend yield and with good performance. Let's continue. The next ticker is WPC. This is one of the stocks that I've been looking for a while. They are being quite stable, and as you can see here, the year to date we have increase of 4.9%, which in most of them it's around minus 15%, minus 30%. So this is a quite stable stock. That's why I've mentioned some of these stocks are quite stable, because usually the dividend stocks are quite stable comparing to other growth stocks like Meta or any other stocks in that area. Regarding the dividend yield, we have a dividend yield of 5.26%. They pay quarterly April, June, September, and December. The ex-dividend day is going to be on 29th of September. They are undervalued 61.2%, which is quite interesting. The future growth is 8.1%, which is good. And the past performance is at 12.10%, which is good as well. And the financial health, we have a 3 of 6, which is quite medium, but having in consideration they have in terms of assets around 1.7 billion, and in terms of liabilities around 700 million. They have a lot of cash flow. I think this is a good financial health score, where they comply with the short-term liabilities, the reduction debt, and the interest coverage. In terms of the market sentiment, we have a hold, and again, it's another REIT that I've been looking for to invest on it. But since I have other stocks, a lot of REITs as well in my portfolio, I don't want to have my portfolio exposed for more than 15%. So that's why in each sector. So that's why I didn't bought this one, because I have other in my portfolio, which you're going to see as well. The next ticker is going to be STWD, Starwood Property Trusts. They have a dividend yield of 8.46%. They pay quarterly April, June, September, and December. They have an ex-dividend date on the 29th of September. They are undervalued 31.6%. The future growth is minus 7.6%, which is bad, unfortunately. And the past performance is 8.0%, with a financial health score of 1 of 6, which they comply with the short-term liabilities. But again, this is one of the companies that are really good in terms of financial health, because they have, in terms of assets, around 20 billion, and in terms of liabilities, around 500 million. The market sentiment, we have a buy, and the year to date, we have a decrease this year of minus 15%, which is not so bad as some stocks. But the only thing here that concerns me is the future growth, which is minus 7%. The dividend yield covers that, and as well they are still undervalued 31%, but although it's negative, and I don't like to invest in companies that have a future growth, unless if I invested before and now the performance is bad. But usually those stocks I try to get out of them when it's possible, unless that I know that the dividends are not coverage. In that case, I try to sell the stock. In this case, that doesn't happen. The next ticker is going to be BATS, British American Tobacco. It's a ticker that I've been speaking in my channel for a while, but usually I don't invest on the American stock exchange. I invest on the British stock exchange, because I'm going to receive the 6.29% straight. I'm not going to have any taxation over that, which on the American stock we have. And I didn't bring Philip Morris, which they pay also this week on the 29th of September, as well as British American Tobacco, because the Philip Morris has a worse future growth, has a worse undervalued, and also a lower dividend yield. That's why I brought British American Tobacco, because I think it's a better value than Philip Morris at this stage. In terms of the dividend yield, they pay 6.29%. They pay quarterly April, June, September, and December. The ex-dividend dates are going to be on the 29th of September. They are undervalued 68.4%, which is quite interesting. Bear in mind, this is the British stock, not the American stock. The future growth is 13.3%. The past performance is minus 36.8%. This horrible past performance was mostly due to COVID, and they have a financial health of 3 of 6, where in terms of assets they have around 40 billion and in terms of liabilities around 60 billion. And in the market sentiment we have a buy. As you can see here on the year to date, the stock has been increasing and grow around 27.4% in the past year, which is quite the opposite of any other stocks. Now we are getting in the realm of the monthly stocks, and we're going to start with the EPR properties. This is a stock that I have on my portfolio for a while. They have paid a dividend yield of 8.60%. They pay monthly. The ex-dividend date is going to be on 29th of September. They are undervalued in 73.3%. The future growth is 10.3%. And the past performance we have a minus 38.7%. The financial health, we have a 1 of 6. They only comply with the short-term liabilities, and in terms of assets they have around 280 million, and in terms of liabilities around 87 million. The market sentiment, we have a buy, and from year to date we have a decrease of the stock of 24.5%, which is quite good for the overall. If you want to compare this with Meta or Google or Microsoft, we have like minus 50% just in 1 year, which this didn't happen with this type of stocks. The next ticker is going to be SLG, SL Green Realty. It's a new entry on the monthly stocks that we have now. They pay a dividend yield of 8.46%. They pay monthly. The ex-dividend date is going to be on 29th of September. They are undervalued 65.1%, which is quite good. The future growth, we have a 16% of growth, and the past performance is 22.6%. The financial health is a 2 of 6, and the market sentiment, we have a buy. The only thing here that we need to have some consideration is that year to date is at a decrease of 44.8% from year to date. But since we have a good future growth of 16%, a financial health score, it's quite normal. The market sentiment, we have a buy, and they are undervalued 65.1%. I think it's a good opportunity to buy and to have this stock on your portfolio. Actually, this is one of the stocks that I'm going to do a little bit more deep analysis in order to head into my portfolio. The next ticker is going to be PSEC, Prospect Capital. It's a ticker that I already have on my portfolio. They have a dividend yield of 10.04%. They pay monthly. The ex-dividend date is going to be on 27th of September. They are undervalued 56.1%, and the future growth is 29.7%, which is an alert that I have here regarding the future growth being negative. The past performance, we have the good past performance with 25.9%, and the financial health, we have a score of 2 of 6, and the market sentiment, we have a hold sell. So in terms of market sentiment, we have more people trying to hold than the ones that are trying to sell. But since the stock has been continuing paying monthly, I didn't have any concern so far. And this stock from the year to date, we have a decrease of 15.2%, which is good comparing to other stocks. Last but not least, we have the another stock on my portfolio, AGNC Investment. They have a dividend yield of 13.6%. They pay monthly. The ex-dividend is going to be on 29th of September. They are undervalued 59.6%, 5%, I mean, and the future growth 118%. This is one of my best stocks with a future growth of 118%, which is quite good. And the past performance was minus 17.7%. And the financial health, we have a 1 of 6, which they complied with the short-term liabilities. In terms of the market sentiment, we have a hold, and on the year to date, we have a minus 35%, which is quite the average of the most stocks that went down that I have on my portfolio. So let's have a look into the last week markets, and we have quite affected the UK market and the Euro market being quite affected. Bear in mind, if you recall the video that I've done last week, we had here a good opportunity to buy some European stocks, and again, I do rephrase this, we should be buying some European stocks, although the Nasdaq went quite down and the SP500 went quite down as well this week. So we do have other opportunities here, although buying UK stocks. So actually the stock that I've mentioned regarding the bets.l, probably it's better for you to go for the American one because you're probably going to buy cheaper if you want to buy and sell. In this case, if you want to do some swing trades. In this case, I do believe if you want to look for the stock for the long term and just for dividends, I'll go for the UK instead. In terms of the last week's sectors, we did see here the energy sector being quite impacted with minus 6%, comparing to the others, which has been around 1% to 2%. Although we have here the healthcare sector with a good increase in the past few weeks. But bear in mind the healthcare sector has been beaten quite a lot in the past few months. So for this week, I think we should be avoiding any stock on the utilities and on the energy sector because we have other opportunities much more interesting on the other sectors like the finance, the healthcare. We still have staples. I see here some opportunities with lower prices. So in terms of the stocks heat map, we have here the confirmation of the health technology sector being increased as we see before. With Lil and Johnson & Johnson, we increase of around 1% each. ABVVA as well, Mark as well, and all the other sectors being quite affected, except the consumer non-durables. Usually, on time of crisis, these stocks continue because are related to hygiene products or, in case of Coca-Cola, consumer goods. Usually, you do buy every single time, so for you to live. Anyway, overall, the market went down quite a lot, with around 2 to 3% in some cases, which we can see here, the Bank of America and the JP Morgan with minus 7%, Amazon with minus 7%, with Costco with minus 6%, Tesla with minus 8%, Visa with minus 3%. So we do have here a really big energy sector being quite affected with 9%, and ExxonMobil and Chevron being impacted in 9%. So we have here in the overall a really big dip with the market going down around 3% overall, or to 4% overall, and that's why at this moment my performance is not great. But what has sustained my portfolio is the fact that I have 75% of my portfolio is entirely dividends, so I'm receiving every single month dividends. So I really not concerned about this decrease because I'm not selling those stocks. So now let's have a look into the SP500 and the Bitcoin. So in terms of the SP500, during the past week, we failed to continue this trends, and we broke out the support. So we no longer have the support here. We have here head and shoulders, and probably this is going to be the last support around the 3,600. But I doubt it, that probably we may see another downtrend for roughly this point over here, which I'm going to trace around here, where these two around here. So probably you're going to reach the new support around the 3,600, and probably we may continue to see a growth. But I do believe this week we're still going to have a negative trend, unless we have a shift more towards the end of Friday or Wednesday. But we're going to finish with no doubt this month negative. In terms of the BTC, we are continuing to see the same trends as the SP500. As you can see here on the MACD, we're still on the downtrend, but still consolidating here. But I'm no longer going to put the support at the 19,000. I'll put the support at the 8,500 or 400 in this case as a new support, and probably we may go down depending on the market. But although having in consideration all the impact the Ethereum had with the Bitcoin, with the miners now selling the graphic cards, etc., I'm quite glad that this went well so low. We could have here a really big impact, and we didn't have that. We did have a downtrend, but this has followed the downtrend as the SP500. So I'm glad that this went drastically down. As we can see here in the past June, we have a really downtrend, but that did happen this week, which is quite interesting and give me some happiness seeing that the Ethereum didn't affect so much the Bitcoin. Okay, guys, once again, I hope you enjoyed these tips for this week. Don't forget to hit the like button and subscribe. That is quite important for me. I'm still trying to reach the 1,000 so I can start to receive some peanuts from YouTube. And if you want to leave some comments, please go ahead and I'll try to answer as soon as possible. And if you have any ideas for videos, please let me know. Once again, guys, thank you, cheers, and have a nice week.